And even if we don't get Weimar Germany style, Zimbabwe style hyperinflation, we're still going to get, Argentina-type inflation, which wasn't hyper, but it was pretty damn high. You got to protect your wealth. You got to protect your portfolio because we're going to have massive inflation regardless of who wins the election. If Germany leaves the euro and goes back to the Deutschmark, then the euro's toast. Gold was the reserve before the dollar, and it will be the reserve after the dollar. In fact, the only reason the dollar became the reserve currency of the world was because it was not only backed by gold, but convertible on demand into gold.
Hello, everybody. My name is Paul Buitink, and welcome to a new episode of Reinvent Money, where I host interesting conversations with geopolitical and monetary experts. Today, I'm talking to someone who opened my eyes back in 2008. He was one of the few analysts who predicted a financial crisis. He and guys like James Turk made me realize the flaws in our monetary system and appreciate the value of hard assets, such as gold. I'm really excited to have him on today. He's amongst others the founder of Schiffgold and also chief economist of Euro-Pacific Asset Management. Peter Schiff, welcome.
Thanks, Paul, for inviting me on your program.
Yeah, let's talk about debt first. The debt levels seem unsustainable across the world. Total debt worldwide is now more than $300 trillion, or more than 300% debt to GDP. US, Eurozone, debt all close to or above 100%. Who is in bigger trouble at the moment? The euro, my region, I'm based in the Netherlands, or the US dollar, or any of the other major currencies?
Well, I think we're all in a lot of trouble. So it just depends on the degree. And it's all, I guess, relative. If one nation is in even worse shape than another, it doesn't mean that the nation that's in less bad shape is in good shape. And, the reason we have so much debt is because central banks have been so accommodating to the borrowers by keeping interest rates so low. In fact, for many years in Europe, they were paying people to borrow money. Interest rates were negative. And so as a result of artificially low interest rates, governments, households, businesses all took on, far more debt than they could reasonably service in a normal interest rate environment, and debt that they can't repay in any environment. And so we are facing a debt crisis, which will ultimately become a currency crisis. Because what happens when you can't pay your debt is you print money. And when you print money, you destroy the value of the currency. And so that's where we're headed. And as the question is, which currency is going to lose the least or the most in relation to another currency? And it's hard to say. Right now, the yen seems to be the weakest of the major currencies. But I think ultimately the dollar has the most to lose because we're the country that benefits most from the current status where the dollar is the reserve currency in a global fiat system. So we really have an advantage in the United States that allows us to take on a lot more debt without suffering the adverse consequences that other nations would suffer if they were doing what we're doing. But I think that when the dollar's status is lost, then we're particularly vulnerable to a massive crisis where our whole standard of living is going to topple to a much greater degree than what you see in Europe or Japan.
Yeah, but would you agree that the dollar for now is the least dirty shirt in the laundry basket, or because that's usually a comparison that people make?
I just think that that's the mistake that people conclude. And the only reason we don't look as dirty is because of our reserve status. So if we didn't have that, then it would be obvious how dirty our shirt is.
Yeah.
But, people just haven't figured it out. And if you look at long-term bond yields, the U.S. government is still borrowing for 30 years at below 5%. And so, that doesn't make any sense that we could do that. If and in fact, if you look at the spreads, the tip spreads, bond investors are expecting inflation to average about 2.3 to 2.4% over the next 30 years. There's just no way that that's going to be the case. It should be obvious that over 30 years, inflation will be much higher, if not multiples higher than that.
And how come the market doesn't realize that?
Well, sometimes the markets get it wrong in the short run. I mean, look at how they valued subprime mortgages. They valued them above par until they became worthless. I think they were worthless the whole time. It's just that Wall Street didn't get it. You know, the people that were buying the bonds and paying premiums to par didn't realize that they were going to lose all their money. They didn't understand the dynamics in the real estate market. And I think the same thing is happening in the treasury markets, which are highly influenced, of course, by government intervention. But I don't think bond yields reflect anywhere near what inflation is likely to be. I think a lot of people have been fooled into believing that the Fed or other central banks can keep inflation around 2%. That they can't, not with the massive amounts of deficit spending in their respective governments. Lots of money is going to be printed. And that means the inflation rates are going to be much higher. You know, if you go back prior to the 2008 financial crisis, just look at the 40 years from 1968 through 2008, inflation averaged just under 5% for those 40 years. And not once during those 40 years did the Fed ever claim that the target was 2%. You know, at times they, were dealing with the inflation problem, but they never said they had a 2% target. They didn't adopt that target until we were under 2%. And then it served their purpose because it was really a pretense to justify printing more money and artificially propping up asset prices, subsidizing government spending and monetizing government debt. They were able to justify the reckless monetary policy based on the fact that we were below the 2% target and that we needed higher inflation. Well, we needed it like a hole in the head, but now we've got a much bigger hole because inflation is well above 2% and it's never coming back down. I mean, not anytime soon. But the markets haven't come to terms with that reality, that what we experienced, that sub 2% inflation, was an aberration. It's not happening again.
Yeah.
We're going to be much, much higher.
Could you also argue perhaps that a lot of institutional money, especially also in Europe, is, for example, pension money that are forced to invest in some of these bonds, sovereign bonds, thereby suppressing yields and giving a unfair picture of what's really going on?
I mean, that's part of it, but it doesn't necessarily explain the spread between treasuries and tips because that could widen. I mean, so I think investors are really clueless right now. But in the short run, investors can make mistakes. Look, Peloton shares during the pandemic were up at $170, and now they're $3. Same company. Investors just got it wrong. They made a lot of assumptions during COVID that weren't true. And they're making a lot of assumptions about the Fed and its ability to control inflation that are just not true.
Yeah.
And so everything is mispriced. Bonds are overpriced and gold is way underpriced. Gold is priced as if inflation is going to stay close to 2%. It's not. I mean, it's more likely to be 20% than 2%. But, the markets haven't priced that in. And eventually they will. I think over the next year or two, maybe within the next year, more people are going to start to see the truth. And that's going to be reflected in a much higher gold price.
Yeah, and do you follow Europe a lot? I mean, you're a son of Jewish migrants from Poland, so you have your roots in this part of the world. How closely do you follow the euro and the European Union and its economic prospects?
Well, I pay attention to what's going on over there, and I've been a critic since the formation of the eurozone. Way back when they first started in the late '80s, I saw the moral hazard inherent in this system. And that it wasn't going to be a method of reining in reckless governments. It was going to encourage even the responsible governments to be reckless. It wasn't going to turn Italy into Germany, but Germany into Italy.
Exactly.
Because, everybody has an incentive to run up their own debt because some other country is going to have to pay for it. And nobody wants to be fiscally responsible if they're going to be held responsible for the excesses of the profligate countries. And that's why all the debt to GDP levels are much higher now than they were before the Eurozone was created. And initially they try to say, well, if you get to a certain level, we're going to kick you out. Nobody gets kicked out. Everybody's afraid to kick anybody out. So the moral hazard is incredible. And, look at Germany, look at, the Bundesbank, which never would have condoned the type of excess, these asset purchase programs and negative interest rates. They never would have done that. And then look what Switzerland did. They weren't even part of the nonsense, but they participated because they didn't want the Swiss franc to gain too much value against the euro. And so they ended up following a reckless path. So everybody has been following the leader down the primrose path. And so the whole world is going to suffer the consequences of these monetary policy mistakes that engendered fiscal policy mistakes. Because if the central banks had been independent, the governments would have had to rein in the excess spending years ago.
Yeah, and you started your career at Lehman, if I'm not mistaken. What would be a new Lehman moment? Let's say the euro will break apart. I mean, I'm more bearish on the euro maybe than you, because I think the euro goes first and then later the dollar will go. But if the euro goes, and given how interconnected all these currencies are, would the global fiat system or the US-based fiat system survive a fall of the euro at all?
Well, I don't know. I mean, the euro, the question is, how will it go away? I mean, maybe the euro will break apart in that there will be a core group of nations that continue with the euro, and there will be other nations that separate. In that case, the euro could end up being stronger, right? If you get rid of Italy and Portugal and Spain and, some of the southern countries, and you just leave Germany, Austria, the Netherlands, a few other countries that are not as recklessly irresponsible. But like if Germany leaves the euro and goes back to the Deutschmark, then the euro's toast, right? Because of the countries that are left. So I don't know how it's going to break apart, or will, when push comes to shove, will the European Central Bank force governments to make dramatic cuts to their spending? Because there should be a big difference between interest rates in Germany and interest rates in Italy, for example. And that's what would cause the Italians to put pressure on their politicians to cut spending if their deficits were leading to excessive interest rates. You can't just say, well, let's just let the ECB buy those bonds and give a subsidy to the Italians to keep on being profligate. And then that pisses off the German citizens. Hey, why are we doing this? We're having to pay somewhat higher rates because of the deficits in other countries. Let's just run bigger deficits ourselves. Why should anybody be fiscally responsible if they don't get the benefit? You're going to get the benefit, or that you're going to be treated the same whether you're responsible or not. Right? It's kind of like a socialized system of monetary policy, not a free market, and so the consequences are obvious. But they've held it together for a while. But it's obviously like, now, it's getting more and more difficult.
It's like a monetary tragedy of the commons, right? Everyone has an incentive to participate in to graze as much as possible, because the other ones are doing it as well, until you reach a point where there's nothing left anymore, no grass. And if you look at the sentiment in Europe, and also if you look at the European elections that are coming up soon in next month, that the sentiment is now turning against some of these Euro-centric and centralized spirits. So it's going to be interesting to see in the next few months what the climate will be like here in Europe, and how it will look like for Europe going forward.
Mm-hmm.
So back in 2005, there was this Dutch documentary that you played a part in. It was called The Day the Dollar Collapses. Back then, debt to GDP in the US was 61%, and now, of course, it's double that. Interest rates were more or less around the same level, 4.5% for a 10-year treasury. But yeah, definitely things have changed a lot since 2005. It seems much more unsustainable now than back in the day. But back in the day, you were already saying the dollar is on an unsustainable path. How is the day going to look like? The day that the dollar will collapse? How does the collapse look like? Could you paint a picture for us?
Yeah, and back then too, there were still some people that were holding out hope that Congress was going to get its act together and deal with these issues. But of course, that never happened, and it's not going to happen. Unless there's a crisis, we'll never act preemptively to avoid a crisis, because there's just the politics don't make any sense. And so it's not going to happen. But sure, I mean, you look at the interest on the national debt right now, it's over $1 trillion a year. And by the end of next year, it'll be $2 trillion. And so right now it's bigger than national defense as far as what we spend. But by the end of next year, it'll be bigger than either Medicare or Social Security. It'll be the biggest line item in the federal budget. And it's going to keep growing from there exponentially. And, you know, the higher our debt is, we have to borrow the money to pay the interest on the debt. So the more money we have to borrow, if we're paying $2 trillion a year in interest, that $2 trillion needs to be borrowed because we don't have it, on top of the trillions that we have to borrow to fund the operating deficit. So it's just spiraling out of control. And so it has to end in either default or massive inflation. Those are the only two ways that this movie ends. And it's a disaster either way, if you're holding dollars, if you're holding any bonds denominated in dollars. But what it's most likely going to look like on an inflationary default, rather than a legitimate, we can't pay, and so we're not going to do it, everybody gets paid in money that's not worth very much, is prices go through the roof and the value of currency collapses. And
because this is the only political, that's the only viable way to deal with the debt load, is just to inflate it away instead of default. But you could also say maybe like a partial default, or like the bonds held by the U.S., for example, held by the Federal Reserve, they could be forgiven, for example. Is that an option? Because it's... Yeah,
well, if they forgive the ones held by the Federal Reserve, it just means the Fed has no way of taking the inflation back out of the economy. So that's kind of an admission that we're a banana republic and that all the debt was monetized. But, you know, it's more likely that maybe they would default on the debt held by the Chinese, for example. Say, hey, we're not going to pay China. But the minute we default on anybody, of course, it's a whole new ball game, because now treasuries are no longer risk-free. They never really were risk-free, but people just didn't realize that. But the whole bond market implodes. The dollar, I think, goes down even under that scenario. But we're more likely not to default on anybody because the politicians don't want that, because it's too embarrassing. It's obvious that, you know, they're the source of the problem if they're the defaulter. They'll just inflate. They'll just print money and blame the ensuing inflation on greedy corporations, speculators, foreigners. They'll blame it on gold buyers. You know, they'll blame it on people like me for encouraging people to buy gold or buying gold, you know, because we helped drive down the value of the dollar. But it's their policies that drove down the value of the dollar. I'm just advising people to buy gold to protect themselves from an inevitable collapse. What we're doing to protect ourselves is not causing the crisis. It's the crisis that is coming that is causing us to take preemptive actions to preserve our wealth, right? I'm not going to just go like a lamb to the slaughter if I know that that's where we're headed. So I'm going to try to do something. And I do that. You know, I help my clients buy physical gold. I also help them accumulate real assets around the world that I think will survive hyperinflation or very high inflation. Even if we don't get Weimar Germany style, Zimbabwe style hyperinflation, we're still going to get, you know, Argentina-type inflation, which wasn't hyper, but it was pretty damn high.
Yeah. So is then the prospect for the dollar is not so much that it will just completely collapse or evaporate. It will just lose relevance. So instead of being the reserve currency at some point, because of all the inflation, the dollar will depreciate against other currencies, and it will just be one of the major currencies, just like the pound. The British pound is still there. It's not the reserve currency anymore, but it still plays its role in global commerce.
Yeah, I mean, the dollar will play a role, but a very diminished role. But the problem is that the U.S. economy can't function in its current form without the dollar being the reserve currency, because we have no way of funding $1 trillion plus annual trade deficit. And so the dollar is going to collapse to the point where that trade deficit goes away. And what is our economy going to look like when we can't import over $1 trillion a year worth of goods that we didn't produce? It's going to look very different because those goods are not going to be available to buy. And so Americans are not going to be able to have those things. And people whose jobs depend on Americans buying those things, well, they're going to be out of work. So, the whole economy is built on the dollar's reserve status, the whole service sector economy. That's why we don't have to make stuff anymore, because we can import the stuff that other people make because they want our reserve currency dollars. They need them. But if they don't need the dollars anymore, they don't need them. Well, then why are they going to give us stuff in exchange for them?
Sure. Yeah.
We're going to have to export to import. If we want to import goods, we got to export other goods to pay for it.
Yeah.
Or we can export our gold, but we'll run out of that pretty quickly.
You can become a creditor nation again it means a reset. It means hard times for many Americans, but at the same time, you're self-sufficient when it comes to energy and food.
Oh yeah.
So it's actually a chance for America then to become great again. We could, Trump.
Especially with technology, computers, AI, things like that. I mean, we have a lot of natural resources. We were very wealthy and productive at one time. We could do that again. In order to achieve that, we just need to limit the size of government. We need to roll back government so that we have the type of limited government that we had initially that enabled us to become so prosperous, that enabled the dollar to achieve the world's reserve currency status. We need to go back to that type of America. But the question is, are the voters prepared for it? Because it's not an easy path to get from where we are to where we need to go. And politicians don't have the stomach for asking voters to swallow any bitter tasting medicine. Nobody wants to level with voters and tell them the truth, that they can't get a lot of the government benefits they were promised. And since politicians care a lot more about their own reelection than about the country they represent, they're going to pursue policies that increase their chances of reelection, not that are good for the economic health of the country.
Yeah, the same dynamic we can see here in Europe. So, would you have any advice then for U.S. voters who to elect in November? What would you?
Yeah, well, we don't have really good choices if you're concerned about fiscal responsibility, inflation, debt. Both candidates are promising more government spending, bigger deficits. So inflation tax is going to go up regardless of the outcome. I mean, personally, I'd rather Trump than Biden, but he's not a panacea. And his first term was a failure, in my opinion, because the debts got a lot bigger while he was president, even before COVID. I mean, sure, with COVID, they went off the charts, but that COVID response was a mistake. And that laid the foundation for the Biden to expand on the mistake and make it even bigger. So, you could vote for Trump, the lesser of the two evils. But you got to protect your wealth. You got to protect your portfolio, because we're going to have massive inflation regardless of who wins the election.
Yeah.
And so that's something that you have to do. You got to vote with your feet in moving your money around. I think you get your money out of paper into real assets. And that's not just gold or silver. That's also stocks, but companies that own real assets, plant and equipment, resources, land, IP, things that have actual value. Because what you don't want to own is just a piece of paper, a debt instrument that will get wiped out. It's just a fixed payment where you're going to get paid a quantity of money in the future, because you don't know if that quantity of money is going to have any value. But if I own real assets, they'll have value. And so that's what you want to own. And you want to be in the right countries, the right markets, the right sectors, the right companies.
Yeah, and what about gold then? So I get your point that in these inflationary times and with all the geopolitical uncertainty, it makes sense to own gold. What would be the role of gold in this new de-dollarized world order where the dollar is just one of many currencies? First of all, will there be a new reserve currency or will it be an era where we have all sorts of currencies that we use without having one dominant one for global trade?
Yeah, I don't think there's going to be a reserve currency that will immediately replace the dollar. So I think we go back to gold as the primary reserve for all currencies. Gold was the reserve before the dollar, and it will be the reserve after the dollar. In fact, the only reason the dollar became the reserve currency of the world was because it was not only backed by gold, but convertible on demand into gold. And so that stopped in 1971. And so the world continued to use the dollar as the reserve, even though it no longer had the characteristics that enabled it to be the reserve. So if we had the Bretton Woods agreement, and at that time the dollar was not pegged to gold and was just fiat, it never would have achieved that status. Nobody would have agreed to it. So they agreed to it, and then once they agreed to it, over time, the world got so dependent on it that when we defaulted, they devalued the dollar. I mean, if you go back and look at the exchange rate of the dollar in 1971, when Nixon went off the gold standard, you used to be able to buy 4 Deutschmarks to the dollar. But by the end of that decade, it was down to 1.5. You used to be able to buy 360 yen for $1. At the end of the decade, it was about 150. Swiss francs were less than 25 cents a piece. By the end of the decade, they were 80 cents. Right? So the dollar lost a lot of value, but it didn't lose its reserve status. And one of the reasons was probably the petrodollar, which was the introduction and getting the OPEC countries to price their oil in dollars. Now, they had to price it a lot higher. When we went off the gold standard in 1971, oil was $3 a barrel. But by 1980, it was $30 a barrel because the dollars that we were paying were a lot less valuable than the ones that we paid when gold was $35 an ounce, because by then it was 800. But I think we go back to gold. Gold's going to be remonetized, not because the governments want it, but because the public is going to demand it. I mean, that's what's just going to happen. There's just no other way that it can end. We got to go back to real money. And the catalyst will be a currency crisis. And then that's where people are going to go, because I don't see that the yen or the euro or the Chinese RMB, they shouldn't be the reserve currency either. I mean, no government should have that privilege.
Yeah.
We need real money. We need a monetary system based on money. If we're going to have currencies, they need to be backed by real money. And that's also my problem with Bitcoin, among others. That's just like a fiat cryptocurrency. We need a real cryptocurrency, which would be a cryptocurrency backed by real money, backed by gold. So if you tokenize gold and put it on a blockchain, that works. If you just create 21 million Bitcoin that have no intrinsic value, that doesn't work.
Yeah, I do like Bitcoin myself. A lot of my customers, they like both gold and Bitcoin, but I know you don't like it at all. So
people like Bitcoin because they've made a lot of money in it. They bought it lower and it went up, so that's why they like it.
Yeah, I also liked it when I was living in South America and Ecuador. It would take me days to wire money from Holland to Ecuador, and with Bitcoin, I could do a lot of things I couldn't do with euros. So for me, it was very convenient.
Yeah, the reason though it's so hard to wire currency is because of government regulation. It's not because if it wasn't for all this government regulation, wires would be very easy to send and very cheap to send. So the question is, how long will Bitcoin have that advantage before the regulators really clamp down and making it a lot more expensive to send money? Because that's where we're headed, right? They're gonna use terrorism as a way to get it done, money laundering, criminals, drugs, but it's all about tax evasion. That's what they're really concerned about, and monitoring the people and knowing exactly what everybody's doing and where their money is going. And so I just think that the regulations are going to get more and more onerous on crypto transactions, in the future.
Yeah, you see it in Europe already with the new MiCA laws that are going to be effective soon. It's becoming very difficult to use crypto in that way. Of course, if you do it outside of the system, it's still possible. But using all the institutions and companies with crypto, then you have the same regulation now as banks almost. So what you have to present to a company when you open an account is not different anymore from a bank. So it's becoming in that sense mainstream, but it's also losing perhaps some of its strength then if it's just like a bank. But what I do
now people are giving up and they're just buying ETFs. They don't even want to buy Bitcoin. They just buy some ETF where a third party has custody and they pay a storage fee. I mean, that defeats the whole purpose of Bitcoin.
Yeah, but then the gold-backed stablecoins, you mentioned it a few times, but I follow the volumes. It's just peanuts. It's nothing. For years now, it's been nothing. So I sometimes check over the weekend to see, if, for example, I would like to know what the gold price is doing over the weekend. So I check it as a proxy.
You don't even need stablecoins. The main thing they do with them is trade Bitcoin. Because people could use Venmo, they could use PayPal, they could use Zelle. There's all sorts of payment, and they have AliChat or WeChat in China. There's all kinds of systems all over the world where it's very cheap and easy to send fiat currencies around, without having to go through a bank wire.
But I mean, the gold.
It's only when you're talking about large amounts that the wires become onerous and lots of compliance.
Yeah. But you like the gold-backed ones. You like them. You've mentioned them a few times in some of the podcasts. But the gold-backed stablecoins are really not much at all in terms of size and volume.
Because remember, almost all the demand for crypto is to get rich quick. It's all about buying the next Bitcoin or buying Bitcoin because it's going to, 10x again or 100x or whatever, go to the moon. And so that's where all the demand is. That's where all the action is. Nobody cares about a crypto backed by gold. It's not sexy. It's not exciting. In fact, the whole selling point of Bitcoin is that it makes gold irrelevant, that gold is obsolete, that this is the new gold. This is better than gold. People like me are dinosaurs. We're boomers. We don't get it, right? Gold's a worthless rock. So that's the attitude. So why would anybody want a crypto that's tied to some worthless yellow rock? They don't even, the crypto people don't even know.
But still, you like
metal.
it because you often say that you like it. So in a way, that's but there's just no demand. Also, most people that I know.
Look, when people want a cryptocurrency to actually use it as money, to have a viable medium of exchange and a unit of account that also is a store of value, there'll be demand for tokenized gold-backed cryptos. But if people just want to get rich quick and they're buying digital lottery tickets, then they're not looking at gold. They're looking at Bitcoin or 20,000 other crypto tokens that they could buy.
But in general, you could also argue that people that own gold, they don't want to spend it anyway. So if it's blockchain based or any other model, people usually buy gold for long-term storage as an insurance, as an inflation hedge.
Yeah.
Like most of my customers, they hate selling their gold. They only sell it because they need euros to pay for their expenses. But in general, they would like to keep it, right? So they want to save it.
But that is going to change.
Still spending it.
Yeah, that would change over time. If you're buying gold to store it, you're not going to spend it. You're going to spend your fiat first.
Yeah, exactly.
But let's say your paycheck, you're a typical guy, and your employer is paying you in gold. And so every month, right, your entire paycheck is given to you in grams of gold. Well, now if you want to pay your rent, you pay it in gold. And your landlord takes gold in exchange. You go to the grocery store. I mean, if we all start using gold, yes, we're going to save what we don't spend. So if I earn, let's say, 1,000 grams of gold and I spend 900, I can save 100 of them at the end of the month, right? I have some savings and I can keep earning. And you could even do this even if your landlord doesn't want to get paid in gold, because you can sell some gold to pay your rent. And just so you can start with gold and then sell off what you need to pay your bills and keep whatever you don't need, right? So you could do that, and then you could use gold, because gold can function as a medium of exchange, and it's actually cheaper to use and a faster payment process than using Visa or MasterCard or some of these other payment rails. But you have the added benefit of money that isn't going to lose value the way fiat can. And I think ultimately what would drive the adoption of a return to the gold through blockchain or crypto, however it happens, it's not going to be the buyers so much as the merchants, the sellers, the people who have goods and services to sell. They're going to want to get paid in something that's not going to lose value. Now, if we start to live in a world where inflation is 10% a month, for example, that it's very hard to operate a business in that world. It's very hard to sell goods and take in dollars when you may not be able to restock your inventory with the dollars you got from selling the stuff that you had. You could end up losing money on every sale. But if I demand payment in gold, that's a whole different story, because now I have gold. And so if the prices of the stuff I need go up, well, the price of gold will go up too. So I'll be able to restock my inventory because of the savings. So ultimately, that's going to happen. I mean, you go to a lot of countries now that have a lot of inflation. They have black markets where if you want to buy something, you got to come with a hard currency. They won't take the local currency. They don't want it.
No.
And so the same thing might happen with the dollar or the euro.
Yeah.
People might not want those currencies either.
And what would you advise people then in terms of storage? Because we've seen, especially after the start of the war in Ukraine, that the Russian assets for 300 billion were frozen. So confiscation is always a risk. If you store your gold somewhere else, there's always this risk, the counterparty risk.
Yeah, you have to have a trusted custodian, in a jurisdiction that has a good rule of law, so that the government can't just come in and seize it.
Like, for example? What would be a good jurisdiction in your view?
Well, you have, let's say, Switzerland, is probably not going to steal gold. And there's other countries that are probably not going to do it. And, you have companies that have a, reputation to protect, and they're not going to steal their customers' gold. They have a lot of goodwill in their brand, and they want to maintain that. A lot of people think, third parties, you can't trust third parties. Well, without third party trust, we'd have no insurance industry. I mean, everybody that buys an insurance policy is trusting a third party to pay the claim. But, we have a huge insurance industry built around third party trust.
Yeah.
But of course, you have rating agencies that rate companies and give them a credit rating, and, which companies have a history of paying claims. There's a lot of ways for the free market to help consumers and reward companies for being honest and living up to their commitments. And that goodwill has a value.
It's not so much the companies that most people. It's also the governments, of course. We had 1933, of course, confiscation. Is that an event that could happen again?
1933 was a very different environment, because remember, we were on a gold standard then, and the government, Roosevelt, wanted to devalue the dollar. Gold was $20 an ounce, and so he asked everybody to turn their gold in out of patriotism, really. And then when the government got everybody's gold, they said, okay, now the gold is worth $35 an ounce that you just gave us. We gave you 20 for it, and now it's worth 35. And so that's what they needed to do. But the government doesn't need that anymore. We're on a fiat standard. The government wants money, it just prints it. So they don't have to take our gold. They just take our purchasing power by printing more money. If the government comes to the point where it's confiscating gold, it's for a totally different reason than it took it in 1933. But if they're seizing gold, they're probably also seizing real estate. They're probably seizing stocks. And the gold is the hardest asset to seize because they don't know where it is.
Yeah.
It's easy to find your real estate. It's easy to find your stock portfolio. Nobody has certificates anymore. Everybody's got, a brokerage account. The government knows where all of our stocks are. Yeah. And all they have to do is go to the brokerage firm and take it. That's what David Rogers Webb says. I interviewed him about the Great Taking. What do you think of his story, the Great Taking? That there is a chance that at a certain point, when the whole situation becomes unbearable, not sustainable anymore, that governments and bankers worldwide would take stocks and some other assets that are easily to take. Look, you're talking about a communist revolution, right? That's what happens when you have a communist revolution. The government seizes private property in the name of the people, takes it away from the owners. So is there always a risk that a nation goes communist and they just seize everybody's assets? Yeah, that's the risk. And the asset that's hardest to seize is your gold coins. But I hope that doesn't happen. I mean, I think that's a low probability event that we actually have outright nationalization of private property and the means of production. I mean, it's happened, in countries. Cuba had a communist revolution, and that was a big problem for Cuba. It still is.
Yeah. Well, at
but
this point,
I hope that doesn't happen in the United States.
Yeah.
But that's what it would take for them to seize your gold. I mean, there's no legal or constitutional authority or reason for them to take your private property.
At this point, we can't rule out anything. We live in bizarre times. But thanks so much for your time, Peter. Any closing remarks from your end? Something you wanna tell my viewers?
Just thanks for having me on, and anybody who wants to buy some gold and silver should contact Schiffgold. And we're not selling nearly as much as you would think, given that gold has almost hit or has hit $2,400 an ounce. We hit all-time record highs in all currencies. We should be doing a lot more sales, but it's not just Schiffgold, it's throughout the industry. In fact, Americans have been net sellers of gold this year if you look at the ETF outflows. So that's normally not how investors behave. They don't sell gold when it's making new highs. They typically buy it, which is why we're probably going to keep rising, because we're not going to rise until the public finally throws in the towel and buys. Then we might have a dip. We'll have our first correction. But I think right now, I think it's clear sailing for much, much higher gold prices. Yeah, silver too, in particular, which is still a fraction of its old high. So silver's a good buy. And my asset management company, Europe Pacific Asset Management, people who have portfolios that they like me to manage. I have a team here in Puerto Rico. We build diversified portfolios. We can concentrate in the mining sector, or we can have more broad portfolios that are more focused on balanced growth and income. But it's all about inflation hedges, stagflation, preparing for a world where the dollar is no longer the reserve currency. I think it really changes the investment landscape. I think that people who haven't adjusted their portfolios in advance are going to experience a significant degradation in the value of those portfolios. So I think if you get in front of this wave, I think you can surf it and have good returns.
Yeah.
Other people can follow me online at I'm on Twitter, or not Twitter, X, Peter Schiff. I got over 1 million followers there now. So I post a lot. I'm on Facebook, Instagram, YouTube. I have almost 600,000 subscribers to my YouTube channel. You can listen to my podcast there, or at schiffradio.com, The Peter Schiff Show. Also just recently started a new newsletter. Free newsletter comes out every day. Schiff Sovereign. Just got to go there to sign up. We put out a lot of content.
Right. I'll put all the links in the show notes so people can easily look them up. Thanks so much for your time, Peter. Like I said at the start, I've been following you for 15 years now, so it was really nice to finally be talking to you in person. Take care.
Yeah. Keep on. Paul, thanks a lot.
Yeah. Talk to you later.
Bye-bye.
Bye.